Ever wondered how significant a role your credit score plays in your financial life? Let's dissect this a bit. A credit score is a number that represents your creditworthiness. It's like your financial report card, and it's calculated based on your credit history, your outstanding debts, your payment history, and even the length of your credit history. Now, why is this score so important, you ask? Well, it's used by lenders to gauge whether you're a safe bet when it comes to borrowing money. Whether you're dreaming of a new car, a home, or any other big-ticket purchase, your credit score can be the deciding factor. A high credit score can open doors to better interest rates and more favorable terms. On the flip side, a low score can make it challenging to get approved for credit, period. So having good credit isn't just about getting loans. It's about financial stability and freedom. But how can you improve your credit score? Let's dive in. Improving your credit score isn't an overnight process, but with consistent effort, you can certainly make a difference. Let's commence by exploring the initial steps to enhancing your credit score. First and foremost, it's crucial to check your credit reports for any errors. These reports are like report cards for your financial health, and just like any report card, they should be error-free. If you spot inaccuracies, don't hesitate to dispute them. It's your right to have them corrected. Next, let's talk about the importance of punctuality. Paying your bills on time is not just good manners. It's a positive signal to lenders that you're a reliable borrower. Late payments can leave a negative mark on your credit history, and that's something we want to avoid. Reducing the amount of debt you owe is another important step. It's simple, really. The less you owe, the better your credit score. Start by creating a budget and sticking to it. Use any surplus money to pay off debt. It might be tough at first, but remember, every pound counts. Now for some more advanced strategies. Keeping old accounts open, even if you don't use them often, can positively impact your credit score. It's all about the length of your credit history. The longer it is, the more information lenders have to assess your credit worthiness. Limiting the number of new credit lines you open is another savvy move. Every time you apply for new credit, it can create a hard inquiry on your credit report, which can temporarily lower your score. Lastly, consider diversifying the types of credit used. Having a mix of credit, such as credit cards, a car loan, or a mortgage, can show lenders that you're capable of managing different types of credit responsibly. Remember, the key is patience and consistency. Over time, these steps can significantly boost your credit score. So don't be disheartened if you don't see immediate results. Keep at it, and over time you'll see your credit score start to climb. Now that we've gone through the steps, let's quickly recap how to improve your credit score. And firstly, we discussed the significance of paying your bills on time. This is a fundamental step and can't be overstressed. Making consistent, timely payments demonstrates to lenders that you're reliable and capable of managing your financial obligations. Next, we talked about keeping your credit card balances low. This is all about your credit utilization ratio, the percentage of your total credit you're using. A high ratio can negatively impact your credit score, so it's best to keep it as low as possible. Then we discussed the importance of not closing old credit accounts. This might feel counterintuitive, but remember, part of your credit score is determined by the length of your credit history. Closing an old account can shorten your credit history and may lower your credit score. We also touched on the value of diversifying your credit. Having a mix of different types of credit, such as credit cards, a car loan, or a mortgage, can show lenders that you can handle various types of debt responsibly. Lastly, we mentioned the importance of regularly checking your credit reports for any errors. One small mistake can have a huge impact on your credit score, so it's crucial to ensure everything on your report is accurate. Remember, improving your credit score isn't a sprint, it's a marathon. It requires time, patience, and consistent effort. But the rewards are significant. A higher credit score can open doors to lower interest rates on loans, better credit card offers, and more financial opportunities. The journey to improving your credit score may seem daunting at first, but with these steps in mind, you're already on the right path. It's about making smart, informed decisions and taking control of your financial health. So keep these tips in mind and start working towards improving your credit score today. Remember, your financial future is in your hands.